And as tensions escalate between the U.S. and its allies, capital is moving and markets are feeling the shift. We're kicking off the second half of 2025 with two big questions. What's next for Philippine capital markets, and how are global capital flows being rewritten in real time? From weak index returns to a pullback from U.S. assets, the themes that define the first half are setting up a high-stakes second half. Joining us now to break it all down is Jonathan Ravelas, Senior Advisor at Reyes Tacandong Co. Hi, Jonas.
Hi, good morning, Mikey.
Good morning
to your list.
So much to talk about. We're going to be leveraging off of your 30-plus years of experience in this industry. Okay, so challenged by the global environment, we just closed the first half with the PSE Index down 1.61% year to date. What does that tell you about where we are now and where we're headed?
Well, basically, I guess there's the first half highlighted a wait and see. And again, as we draw closer to July 9, which is the end of the tariff pause, most likely the market will see what the impact will be. And probably from then on, we could probably see some weather risk on trades that will come, especially now that geopolitical tensions have subsided. Oil prices are down in the Philippines. Inflation has also come down. So this could spark a potential risk on if we get to see more signs that growth is coming back.
Mm-hmm. Now, how do we stack up against our peers in the ASEAN? We're not the only ones taking that wait-and-see stance.
Okay, I think what we need to look at is the Philippines as a unique perspective. In terms of government revenues, meaning tax collections, we are at par with our peers. However, in terms of expenses, we have one of the higher deficits, mainly because we're playing a catch-up game, and we're the only country in the ASEAN that is actually spending on ramp-up infrastructure. So that is actually a good story that could shield the Philippines from any potential slowdown from a global perspective. Now that even inflation is is already manageable, and this should already gain traction, particularly in the second half of the year.
Yeah, talking about global policy shocks, Jonas, Trump's big, beautiful bill is about bringing jobs and factories back to the United States. How do you see this affecting our own industries, semiconductors, BPO, electronics?
Well, basically, in the recent update of the government's DBCC, they've actually lowered our export target from 5% to negative 2%. So this already is a clear signal that, the 17%, though we're not really as export-oriented, is actually going to hit us. And again, we're still awaiting what the trade talks between the U.S. and the Philippines. So at worst, we're at the 17%.
Okay, that's right. Trump's new tariff deadline, July 9. How exposed are our exporters and the peso? Let's talk about that also, because weakness in the peso will help offset that 17% tariff.
Well, basically, I guess for the Philippines in general, we're really not as affected, but we're affected through the secondary inflationary effects plus the currency volatility, as other countries will try, particularly those who are export-oriented, to probably try to sell their products much cheaper. So the question is competitiveness. So definitely there'll be some currency adjustments along the way, secondary effects on inflation. So definitely this is something what investors will try to look at, especially in the second half of the year, whether we're still able to maintain inflation below 2%, or if it will climb above 2%, will it stay below the 3%? So these are things that could further enhance growth if the BSP were to cut by 4 times. So we're expecting one before end of by September or August. So another 25, which will bring it to 5%. And if inflation is by then definitely we could probably see another cut towards 475 by the fourth quarter.
So more rate cuts this second half. Taking a look at the PSE Index again, Jonas, we saw strong gainers in the first half. They were the LT Group up 22%, Pure Gold up 17%, Converge as well up 17%, Bloomberry up 11%, URC up 13%. What are the themes driving this, and how sustainable is this trajectory, that trajectory in the second half?
Well, with the second, what we've seen so far is that with inflation being manageable, we're starting to see recovery in consumer counters like what you mentioned earlier. And of course, one of the things that really took off is really more on the gaming side, especially when things aren't as rosy. We get to see some, the rise of liquor sales and gambling is high.
All right. As we talked about the gainers, let's talk about the flip side of that. Also, the laggards. In the first half, that was ASEAN down 36%, Globe down 22%, Jollibee down 16%, Monde down 15%, and PLDT down 6%. Are these names oversold, or is this a structural reset in how the market values telcos, renewables, and some consumer plays?
Well, in the early part of the year, I think most of the investors have taken the ability to do a sell on rally. So every time the market moved towards 6,500, investors actually took the opportunity to lighten up positions so that they're agile enough to probably take in, or rotate their portfolio into counters that would probably benefit in the second half of the year. And we've already seen early winners, infrastructure, and eventually consumer.
Onto a specific stock rather. There's talk about the shares of Digi Plus. Digi Plus, their shares are down 27% in just the last 2 weeks. There is a buzz that the president may announce a crackdown on online gaming in the sauna. How much of the sell-off on Digi Plus was because of fundamentals, and how much of it was because of political risk and staying away from political risk?
Well, basically, I guess, the rally of the stock was quite fast. So, of course, and especially when, in a country where, a lot of people are challenged by the present situation in inflation, a lot of people are also wondering, given the seamless transfer of people of money to gaming, this is something that became a bit alarming. And even Nielsen reports talks about this, shift to e-gaming or e-gambling.
Okay. All right. Zooming out, let's talk about the global shifts in money, Jonas. Why ultra-wealthy Asians are pulling back from the United States. A Nikkei Asia report says that ultra-wealthy investors across Asia are quietly pulling back from U.S. stocks, citing Trump's tariffs, Fed attacks, and recession fears. Is this a turning point for global capital flows?
Well, basically, I guess a lot of the investors are worried about what would be the impact of Trump's tariffs. And what we've seen so far, despite, since the start of the year, the U.S. markets are close to their February 19 highs. And one can think that whether this could be, a high valuation issue, and all of the potential impact of the tariffs will come in the second half. So there's a question whether we'll probably see a top in the U.S. market in the coming months. So basically, people are worried where will they probably shift their funds. So there could be some profit taking in the second half of the year, and others are still, expecting that the Fed will cut by at least 50 basis points. So this is where probably we could be, shall I say, topping out, meaning there are the higher probability of a sell-off in the U.S. and probably a shift to other markets. And one can only think that, emerging markets like the Philippines, Vietnam, Thailand, Indonesia would probably be the next potential targets.
Now, in this as this happens, are you starting to see Filipino investors, high net worth individuals, and institutions rethinking their own U.S. exposure?
Yes, I think they do. But, you need to be able to be agile enough to lighten up some position and still stay defensive amid all of this uncertainty. So, of course, people will always want the developed markets because of the certainty of the potential gains as compared to emerging markets.
Private banks in Singapore, Japan, and India, they say they're moving their clients into gold, yen, and multi-asset strategies. If you were advising a Filipino family office today, given everything that's going on, what would you advise them to do?
Well, basically, it's really all about a diversification in one ASEAN exposure, Philippine consumer and infra plays, and of course, a certain extent to this gold and multi-asset funds. So basically, to be able to have this diversified portfolio to ensure that, given all of this volatility, your portfolio remains well diverse enough to eventually withstand any volatility.
All right. Thank you so much, Jonathan Ravelas, Senior Advisor at Reyes Tacandong, for sharing your insights with us.